South African listed Octodec with properties in Johannesburg and Pretoria has been hit by a triple whammy. High interest rates, the low economic growth environments and a lack of service delivery from municipalities has led to a 6.4% fall in the group's interim distributable earnings. Despite this, the dividend has been maintained at 60 cents. And company FD Anabel Vieira joins us to unpack the performance in greater detail. Anabel, always a pleasure and a good afternoon to you.
Thank you.
Wonderful. We did see rental income increase 3.1%. However, that didn't quite trickle down to the bottom line. Just help us understand, all the little line items that might have led to this performance.
Yes, so unfortunately, doing business in the current economic environment is not easy. So our rental income has been increased by 3.1%, and it comes off the back of our increased residential income. So that sector has done pretty well. However, our operating expenses, it consists mainly of the administered costs. Assessment rates, electricity, etc., they've all been increasing way above inflation, and these don't always or cannot always be passed on to our tenants. And that has impacted, obviously, well, the full cost is included in our property operating expenses. So that does reflect on our distributable income. And also the weakening rand, it has impacted our repairs and maintenance. So a lot of our upgrades to our residential buildings, etc., is all recognized under repairs and maintenance. But costs like lifts, air conditioners, paint, etc., is all impacted by a weakening rand.
You also mentioned the issues of service delivery here. Help us understand exactly what you make reference to, Anabel, but also how it's really impacted your ability, to see through some of the gains that you were meant to see through.
So, look, what we've done very well, so we did mention in a previous reporting period that we were buying generators for our residential properties. We've also rolled them out to our commercial buildings. So our shopping centers have all got generators. We've also sort of rolled out a system whereby we recover our costs from our tenants. So our generator costs, in fact, have come down significantly. We've introduced solar power to a number of our buildings, and we've seen a positive movement there. So in terms of our electricity increase, whilst it's increased 18% last year from Eskom passed on to the municipalities, we've gained there because of the solar power that we've introduced. So we are still able to recover from our tenants, but we use that to repay our investment on that.
I also want to speak about some of the strategic focus items that you have mentioned in the past year, and maybe even asking you to shed some light, maybe looking specifically at repurposing some buildings, Health Connect, that being a big one, but also speaking about enhancing some of your student offerings.
Yes. So, look, we have, the board has just recently approved the redevelopment of one vacant office building, and we are launching a new product. It's actually called Vieira to City. So that means our city. And that is a very different product. It's really catering for the lower LSM market because we do believe that in these times, it's very difficult for the average person to afford a place in our normal places called The Place. So we are launching this product. I think it's going to be well received, specifically by the student market, but also the lower income groups, your normal retail people, etc., who don't earn big incomes. And that is based on the premise of shared accommodation. And we provide all the other facilities, such as common kitchens, common bathrooms, etc. And that, I'm sure, is going to be taken on very positively. We're very confident that once we roll that out, it's going to be taken well. And we've got a number of buildings that are suitable for this conversion. So I think we'll take up on that.
And then looking at the capex that's allocated to such initiatives, also Anabel, but also just generally there, how have you allocated capital over this period? And also maybe speaking to gearing as well.
Okay. So look, our gearing is sitting at 38.5%. So it's way below the 40% that we really set ourselves a target for. But in respect of these conversions, we're actually looking at our VMTN market. and we're looking at raising either green or social bonds to fund these projects. But we're not looking at major expense. We're not raising something from the ground. So for us, it is a lot more affordable because the structure's there. We're looking really at providing your bathrooms, your kitchens, etc. So yes, those are the expensive items, but we don't have to deal with a full property from the ground up. Yeah. So I mean, in respect of the one that we're going to launch now, we're looking at the 44 million rand capital investment and a 13% marginal yield.
Another one that's interesting is because of the repurposing that we're seeing now, Anabel, I take it that, acquisitions aren't on the cards at this point. Are there any disposals on the cards?
So yes, I mean, if anyone looks at our presentation, there is a very small disposal unfortunately, for the first 6 months. But just having touched base with our disposal department, we are very comfortable that we're going to dispose of 2 office buildings in the very near term, so before the financial year end. That will, first of all, reduce our office space, also reduce some of our office vacancies in that space. And we're hoping that once the elections are over, that things stabilize a little bit more in South Africa and that there's more appetite for growth. So hopefully we're going to see more buyers out there and also maybe more sort of opportunities for us to develop things that we've set aside possibly for disposal. We may even want to retain that to develop.
Brilliant.
So, we're all sitting back and holding our breath for better days.
Absolutely, Anabel, an absolute pleasure hearing from you. It's always a pleasure talking to you. That was Anabel Vieira. She's a FD at Octodec.